Now, we are watching for you the parliamentary precinct. Any moment now, we're expecting the minister as well as his entourage to make their way down those corridors and be delivering to the nation what some are saying and analysts are saying is to be perhaps one of the toughest budget speeches. But we'll find out if our guests in the studio feel the same way about that. Joining us is Newzroom Africa's economic contributor Ayabonga Cawe, as well as Newzroom Africa's business reporter Kopano Gumbi. Good to have you both with us. Ayabonga, I'm just saying that every time we talk money and big monies, that's when you grace us with your presence. But I wonder, you know, some economists and analysts are saying that this is touted to be one of the toughest budget speeches ever. What are your sentiments on that? I mean, you also actually made an observation earlier on that in 2016, the Minister of Finance delivered the budget speech on exactly the same day, the 24th of February. Yeah. So I guess juxtaposing then and now, what are the differences and similarities?
So 5 years ago, Thami, an afternoon to you and the viewers of Newzroom Africa. 5 years ago, on the same day, we had Finance Minister Pravin Gordhan delivering the 2016 budget. And just to maybe go back to your point that you were asking earlier, which is this the toughest budget? Well, we often feel every year is the toughest budget. But I think the context has a lot of similarities. We found ourselves in the same point where capital markets were quite jittery at the time. You'd remember the December 2015 debacle around the hiring of one Des van Rooyen as the finance minister. There was still a lot of spillover in the capital markets from that, a lot of uncertainty. We saw bond yields clearing around the 9% mark on the 10-year South African government bond. So there are a lot of similarities, but I think a lot of the differences are fundamental. There probably isn't as much space as we might have had then to maneuver. We find that the situation then, of course, was that you had some tax increases coming through in the budget. There was a revision of the expenditure ceilings. And it feels like we've tried to do that as much as we can. And we probably can't avoid, I think, in this particular budget, some tax increases, and they might come through in things like the fuel levy, capital gains tax. We might see an increase on the sugar tax as well. But the reality of the situation is that things have to happen both on the expenditure side and on the revenue side, irrespective of whether commodity prices have maybe gifted us much better than expected collections.
And talking about the taxes, Kopano, we did hear in the medium-term budget vote speech where the minister was talking about having to raise 5 billion rand over 5 years, and this is going to come from the taxes. How do you foresee these taxes being structured? Do you think we're likely to perhaps see a rise in corporate tax as well? I know South Africa has one of the highest corporate tax rates in the world.
Absolutely. I think it'll be interesting to see what they decide on the taxes. Consumers are quite stretched at the moment, so trying to pass on those taxes to consumers seems like a bit of a difficult one to pass off. Customers and the environment wouldn't necessarily agree with that one. Company tax could also be an interesting option that they could explore. I mean, companies, they need the investment from companies, so trying to add a new tax onto how they already feel they're already stretched, I'm not sure that companies would be then willing to go back and reinvest in the country if they were told that, oh gosh, we have to increase taxes now for them.
And Aya, how do you believe raising corporate tax would actually affect the tax collection success rate?
Well, I mean, I think a lot of people have probably advised against an increase in corporate taxation. I'm probably in the middle of that one, because I think the difficulty we find ourselves in is that there's been significant enterprise destruction during this moment of COVID-19. So the base that you thought you might have had in February 2020 of corporations that you would tax and levy taxes to is probably not the same base that you have now. I think the issue is probably that people want to, at this point, avoid some of the income and consumption-related taxes. You don't want to increase VAT, you don't want to increase, you know, outside of your excise duties, some of the consumption-related taxes because of where consumption is in the economy. But I think one of the options that you would have seen even the Davis Tax Committee suggesting would be to consider taxes on wealth and to consider, just like they did in 2016, increases on the capital gains tax, increases on specific forms of wealth that'll be able to allow us to collect some money. But all of that money in the bigger scheme of things is really going to be marginal. I mean, if you think about the big spending priorities that have been brought about by COVID-19.
And perhaps let's hop on that particular one. And I'm asking you to comment on this as well. But let me start with you, Kopano. We know that taxes form the bedrock of revenue collection for the state. And if that is not to be the focal point, what are the other options that would have a significant contribution to the amount of capital that is collected?
The most significant one would be to cut government spending. And they've been talking about trying to reduce the government overall bill, not just the wage bill, but the amount of expenditure that government as a whole uses every year. And that would be the obvious choice for them, because the minister around 2018, 2019 mentioned that they could look to cut down around 50 billion a year, or looking to, over in the medium term, to have around 300 billion rand in taxes, which would make up the shortfall that we had last year, just from reducing government spending.
And the public sector wage bill?
Well, that's going to be a very difficult one. I think, Thami, the big challenge that we have at this point in time is, one, what happens once you feel you've hit the end of the road in terms of reprioritization? And there's certain frontline delivery functions that I guess the reprioritization has already happened, where you can't probably take that any further. I think the other element, which is something that the National Treasury has accepted, and you were speaking to Mamukiti Dijane about this earlier on, is increasing the borrowing requirement. And we certainly have seen in the lead up to the October MTBPS, National Treasury going to the bond markets, having oversubscribed auctions. And that's going to be part of our reality for the foreseeable while. Just like we say COVID-19 is going to be with us for a while, I think debt to GDP in the region of around the 90s is going to be around with us for a while. And we expect the Minister Mboweni, to speak to that effect. But in doing so, also really, I guess, push forward some of the targets of when we'll achieve a primary surplus. I think many of us were very critical last year when the National Treasury came out and said by 2024 we hope to achieve a primary budget surplus. In a once-in-a-century crisis, you're cutting back nearly $250 billion in spending in order for you to run a surplus, while many people face the prospect of starving, face the prospect of losing their jobs, and in some cases face the prospect of not being able to get the healthcare they need.
How will the minister, if at all, balance the needs of the trade unions who are continuously marching, and even marching today against the really high rate of unemployment, and even with the public sector wage bill? Is he going to try and manage those expectations to try and please them, while also delivering an austere budget as far as public spending is concerned? Is that a rope that he's going to try and walk?
I think it's highly unlikely, Thami. There are a lot of audiences that are listening into the speech this afternoon, chief among those, of course, the ratings agencies and many creditors who hold South African sovereign debt. And one of the things that have certainly, I guess, kept them at the table, according to many suggestions, has been this commitment to cutting the public sector wage bill. Now, we know that that process is a process that continues to play itself out in the courts, and probably, I guess, a contentious debate, no doubt, because the next wave of negotiations has to also kickstart in the not-so-far future. So I think that's something where we're probably not going to hear a tone that might be conciliatory when it comes to that, because of where the matter is at the moment. But I think the reality of the situation is that even if you do freeze some of those posts, I mean, this is not a new thing. In 2016, if we were to go back there, we saw something similar happening. We saw a freeze of administrative and managerial posts within the public service, which has continued going forward. And I think the big issue, certainly when we talk about the public sector wage bill issue, is that Tito Mboweni is going to have to convince us whether or not that's going to have an implication on frontline service delivery. Because especially at a time now where you've got a vaccination rollout program, you don't want a situation where community health workers end up taking the can for the difficulties around resolving this particular issue.
What we have seen, Kopano, and this is a cross here between the unemployment figures that were released yesterday and the prioritization that you're talking about here, one of the areas and one of the sectors that actually did gain employment was in the areas of community services, because of the rollout and the substitute teachers, the young students who were brought in, or young people who were brought in to assist in the education department. Do we perhaps expect that to be bolstered as well in this particular budget, considering the fact that we are still within the COVID-19 pandemic?
I mean, one would imagine that will be the case. They're going to try their best to improve and increase the number of frontline workers as we go into rollout. I mean, the vaccine rollout has been touted as the #1 priority in order to restart this economy. And that's a global situation as well. Most countries across the world also feel like without a vaccine, economic activity is really going to be quite delayed. It's going to struggle to pick up. So I can imagine that they're looking quite seriously at how they improve and increase the number of frontline workers that are available to enable this rollout.
And I'm sure you'll agree with me that what South Africans are wanting are more permanent sorts of employment that they can rely on, that they're able to plan their own lives around. How do you believe, Ayabonga, this particular budget will deal and tackle the issue of employment creation and sustainable employment?
We saw, Thami, in the special adjustment budget and even in the medium-term budget policy statement, around just under 20 billion rand reprioritized from many departmental budget votes to what was called the Presidential Employment Intervention, which was putting teacher assistants in place, clerks in many different places, you know, and all manner of frontline workers, ECD and creche assistants and many others. And I think that's one of the positives in our budget recycle, because if we want to answer the question you're asking, Thami, about how do we create more retention within the labor market, more permanent roles, well, we're going to have to experiment somewhere. And I think the experimentation is not only just when it comes to the social relief of distress grant, but the experimentation is also in creating a program that creates a viable entry for young people into the public service in a manner that improves the productivity, the efficiency, and the ability of the public service to deliver. I mean, think about when school started at the start of the academic year. Many a teacher came out and said, you know, many of these teaching assistants have been a massive and a major relief because it's allowed us to free up our time away from the admin-heavy tasks that we have, freeing up some time for us to do what in effect we've been trained and qualified to do, which is to teach. And I think these are some of the things that we need to continue to underwrite and to bankroll, and in so doing be able to build a capability that's necessary for us to do this at scale, but to do it in a way that gives people meaningful and very decent work.
Kopano, we heard the President highlight the important role that business has to play in job creation in the country, saying that government has to put in place policies that are going to support business. Let's juxtapose that to the rhetoric that we're hearing from the likes of the EFFs and the Zwelizimavavis about the fundamental flaw that exists in government's policy creation and stance. So if you could just ponder on that for a moment, and when we come back, how do we move forward with that? Because it looks like these are two parallel paths that the government is traveling on, and that which some of the opposition parties and some of the trade unions are actually calling for. What would a hybrid policy look like should such exist? So we'll continue with our conversations when we return, as we head towards 2 o'clock in expectation of the Minister of Finance, Tito Mboweni, to outline not only Treasury's pockets at the moment, but also where Treasury's finances are going to be allocated in the year. We are still on the lookout. We are seeing some of the various stakeholders already making their way to the National Assembly.